So with all this talk about student loan forgiveness, very few are talking about the impact that it would have on, let's say, your credit score or let's say the tax that you might have to pay if you got your debt forgiven. And it's understandable because obviously when it comes to the White House, they haven't given you a real detailed plan on how they plan on going about it. Well, all people care about is making sure their debt gets forgiven. But it is something that you might want to think about because this could impact your credit score or maybe taxes that you might have to pay in the future. So I came across this article on CNBC, and it talks about how Biden's possible student loan forgiveness could affect your credit score. So they're gonna go over this article and just break down on like how it could affect your credit score, if it could affect your score in a negative or a positive way. So let's see. So it said just a few weeks ago, President Joe Biden announced his decision on broad federal student loan forgiveness was coming soon. If you're one of the millions of borrowers who are waiting to see if any of your student debt will be canceled, it's a good time to think about the implications that sweeping loan cancellation would have on both your credit score and finances overall. Below, Select spoke with Travis Hornsby, founder of Student Loan Planner, to learn more about the federal student loan borrowers can expect. So it says, if you've ever pulled your credit report, you've likely seen your student loans listed on there as a type of installment loan. This is a good thing as it shows your student debt actually adds to your mix of credit. Lenders like to see a variety of credit, both revolving and installment credit, because it illustrates that a borrower can manage the different obligations that come with borrowing all kinds of money. And that's true when it comes to credit. Like, lenders like to see that you understand how to manage money. And if you have like revolving credit, which is credit cards, and you're managing it properly, and also you have installment loans, they like to see that you have a good mix, and that shows that you're good with managing money, and that you have everything ordered, that you know how to, if you borrow money, that you know how to pay back. So they like to see that. And an installment loan, which is a loan that, which for, whether it's a car loan, this is also an installment loan. They like to see that you're managing these payments correctly, that you're making payments, because obviously the good mix is a good percentage, has a good percentage on your credit score. So for this reason, paying off an installment loan such as a student debt can actually ding your credit score since it lessens your overall credit mix. Hornsby says, not to worry though, the dip in your credit score will only be temporary, and it's likely to go back up within several months. And that's the thing. Like, once you get that, say you pay off your student debt and you get that, that debt canceled, and you're going to see a negative, you're going to see your score drop a little bit, and it's only going to be temporary, because what it does is it removes that mix of credit that lenders like to see. But the thing is, it doesn't impact your score as much. You'll see a little drop, but then as you keep making payments on other debts, you'll see it go right back up. So it won't be that long. So as he talks about right here, he said, overall loan forgiveness is a fantastic thing. Hornsby tells Select, focus on getting the loan forgiveness, and any kind of impact on your credit score is going to be insignificant. The only exception here that Hornsby points out is the student loan forgiveness happens at around the same time you're making a big ticket purchase, such as a house or a car. If you're planning to borrow money to finance a new home or vehicle, you may want to consider getting pre-approved so your credit score is as high as possible when you go to apply. So basically, if you're making if say you're planning to buy a home, in the next couple of months, or in the next couple of months, or you're looking to purchase a car, you want to make sure your credit score is as high as possible. But if you get your loan forgiven, like I said, it's going to ding your credit temporarily. So obviously it's not going to be that huge of an impact, but you want to make sure your credit score is as high as possible when you go to make a purchase on a home or a car. So he says that if you're obviously going to make a purchase on any of these home or car, you want to make sure, just understand that loan forgiveness will impact your credit score at the time. So just make sure you plan accordingly. All right, so it says the bottom line here is that student loan forgiveness does end up happening. Your credit score will likely be impacted, but only briefly and barely, as in a 5 to 10 point drop. Hornsby adds that he most often sees people focusing on credit scores to the detriment. But when it comes to loan forgiveness, you shouldn't worry about any temporary changes to your credit score. So, having like 10,000 student loans erased from your debt balance would certainly impact your finances in a good way. That's 10,000 off you're off the hook for, and would no longer need to pay. According to Hornsby, there are positives and negative financial outcomes when it comes to having all of your portion of your student loans forgiven. Here are some things to consider: your debt to income ratio. All right, and we all understand how important that is when it comes to purchasing a house, right? They want to make sure when they're looking at your debt and they're looking at your income, they want to make sure that you don't have too much debt compared to your income. So obviously, like, getting that student loan removed is gonna lessen that ratio. So A large debt load, such as thousands of dollars in student debt, boosts what's called your debt-to-income ratio, or DTI. A high DTI can make it more difficult to borrow money in the future, since it indicates that the amount you owe exceeds the amount you're making. When student loans are forgiven, however, this lowers your DTI, narrowing the gap between your outstanding debt and income. So, there's a lot of people with like over $100,000 of student loan debt. Their DTI is, obviously depending on what kind of income they have, can be, very high. And lenders like to see it, below 50%, even some below 30, around 30%. So depending on the lender and depending what kind of loan that you're getting, they want to see as low of a DTI as possible. So getting that that loan removed is going to help lessen that DTI, debt to income ratio. So also, you may get a refund for federal student loan borrowers who continue making payments throughout the pandemic-induced payment and interest freeze, which is currently still in effect through August 31st, 2022. There's a chance they may be eligible for a refund once loans are forgiven, Hornsby says. So now when it comes to taxes, right, it's possible that you may be required to pay taxes on the amount of student debt that is forgiven. That is, however, dependent on the type of student loan forgiveness you receive, Hornsby indicates. For example, income-driven repayment, or IDR, for forgiveness is currently tax-free through the end of 2025. So if you're on that income-driven payment, then you don't have to worry about taxes till end of 2025. But like, this is something you have to worry about depending on what type of loan repayment plan you have, because when it comes to credit cards, I remember when I had credit card debts, and if you've ever had credit card debt, once you get the lender to cancel it, or they say, let's say you owe $10,000 and they say, all right, just pay us $4,000 and we'll forgive the $6,000. You still have to pay taxes on that $6,000 that they forgave. So I mean, this is something that could be possible when it comes to your student loan debt. So this is just something to keep in mind when we go through the process of removing your student debt. Don't be surprised if you do get if they do happen to forgive your student loan debt, that there could be a tax bill that you might have to pay. So just be cognizant of that. All right. So whether student loan forgiveness completely wipes out your remaining student debt or just a portion of it, your payment history from those student loans will likely remain on your credit report. And that's good news if you have a solid history of making on-time monthly student loan payments, but not good news if you haven't been consistent. Hornsby adds, however, it is possible the negative marks and your late payments will be taken off your report following loan forgiveness. Yet this is not certain. Late payments typically appear on your credit report and stay there for 7 years. This is important to note because one payment's history is the most important factor is their credit is in their credit score, making up 35% chunk of their credit score calculation. A good payment history can seriously keep your credit score high, while poor payment history can seriously hurt. So if you're someone that's been making payments on your student loan debt and you've never missed a payment and somehow it gets forgiven, it's gonna stay in your credit report, but it won't hurt you because you have a history of making payments, and people want to see that. But if you're someone that has been inconsistent when it comes to making payments on the student loans and it somehow gets forgiven, that could stay on your credit report. So, and that, like I said, it stays up there for like 7 years, and you want to make sure that you have an understanding on that, because obviously payment history is a huge factor when it comes to your credit score. Like I said, 35%. Is calculated with your credit score. So you want to make sure if you are up to date, you want to make sure you're still making payments. So even though if they do decide to cancel your payments, that at least like going forward, like throughout even your credit score, that it shows a good history. All right, so bottom line, we still don't know what the president's broad student loan forgiveness will or won't play out. You can rest assured that knowing that any forgiveness is a good thing overall. Even if debt cancellation may ding your credit score 5 or so points, it wouldn't be for long, and positive financial implications for forgiveness, we believe, outweigh any negative results. So like I said, if you do happen to be the lucky ones to get your debt canceled, forgiven, do know that it could impact your score negatively, like 5 to 10 points. But as you continue to make payments on other debts that you have, you're gonna see it go right back up in a few months. So it's not a long-term thing. It gets taken care of very quickly. You'll see it jump back up within a few months' time. And as long as you're making payments on your other debts, it won't impact your score that much at all. Unless you're obviously looking to buy, purchase a home or a car at the time it gets forgiven, then you're gonna see that it negative. You're gonna see a drop in your point, but if you got a good credit score in the 700s, then 5 to 10 points isn't gonna be too much. So, so that's all I got for you guys today. If you got any comments or questions, make sure to leave a comment down below. Hit the like button, share, and please do not forget to subscribe. All right, so you guys take care and have a good one. Later.